All right, good morning, everyone. We're going to kick it off here. All right. Overnight action, we saw some sort of back and forth in the Dow and the other indexes early on. We actually saw a bit of a sell-off. We kind of tested the downside in all markets. Then we managed to reverse and really kind of hold those gains into the end of the day. But like we talk about all the time. I mean, typically the continued direction is typically the continued direction. If you consolidate, is the one that prevails. So we've had a hard sell off the last few sessions, and we kind of make a small bounce and move out to the right a little bit. Most likely the resulting trend will be downward unless something changes, because yesterday was felt more like a dead cat bounce in the U.S. than anything. So you can see there all the sectors up kind of across the board outside of really healthcare and telecom sectors. And really just regaining some of the weakness that we saw in tech shares. What we did see was Alcoa that came out after hours and reported earnings. There was an earnings beat but a revenue miss, and they're basically saying that we're going to start to see the end of the glut in aluminum. So I think it's going to be a good return for them. But all in all, decent start to earnings season. With Alcoa always kicking it off. Big move overnight we saw was the U.S. dollar yen, which pushed down through 102, and it was a big pullback there, out of the yen, and really, or a big strengthening out of the yen. And basically, that they were disappointed with the fact that they didn't guide with any more potential QE. That nothing left, kind of on the table, not nothing left, but nothing in the foreseeable future that they talked about. I think markets were really disappointed with that. A lot of people expecting them to come and keep throwing money at the problem. All right, so we also had have the Fed minutes today. That's going to be the minutes of the last Fed meeting, so the markets will probably be paying attention to that as it comes out, but not too big. One thing I wanted to kind of show you guys was just an interesting point, which like yesterday's hellish rally that we saw at the end of the day. A lot of a lot of these outsized movements we've seen in our market as of late have really come on live volume, and saw this chart yesterday makes a lot of sense. That it's a bit of a misnomer that the markets need high volume to really take you higher over a longer period of time. If you look through since 2009, the below average volume days have on average been nice up days, and the above average volume days have actually been down days, for the most part, as you can see by this chart, which I thought was incredibly telling. That it hasn't been a very good indicator of late. Believing the volume. Everyone says, "Oh, you can't believe it because it wasn't on volume," and those types of market beliefs, I guess, have kind of been proven wrong over the last 5 years. So that's something just to think about over the next few sessions. One thing I didn't mention, let me actually just mention it real quick, was that Woolies obviously bought out, made an offer from David Jones, I believe, if I'm not mistaken, a 100% cash offer. And they are paying about 25% premium to what the share price was. Obviously rallied quite hard overnight, $2 billion. So I'm not 100% sure what that's going to do to Woolies cash position, but that's quite a chunk of change that they're throwing out there. They're paying a fairly expensive price, about 11.2 times EBITDA, whereas the average for the last 5 years in developed markets was only around 9.8 for similar acquisitions. Puts them on a forward PE of 23.3, which the average retailer in Aussie is about 17.6. So maybe a little bit pricey, but yeah, we'll see how the market takes it today. All right, getting into Asian action, we saw a little bit of mixed bag. I saw a real whipsaw action out of China, which with opening up quite a bit higher, and then pulling back. It actually was negative at one point and finished just slightly positive. So the Nikkei obviously was sold off on the back of the strengthening yen. The real strong performance came out of Australia, which I think is led higher by the reversal at the end of the day yesterday and into today's session in the mining space. Okay, yeah, so there's very little else to kind of focus on there in Asia overnight. No corporate action on the day, and the market data out today, nothing too big. We've got a trade balance out of Germany later, the current account numbers, also export and import numbers there. We've got total trade balance numbers in the UK, and we've got MBA mortgage apps in the States, and then obviously we're going to see the minutes from the Fed at 8 o'clock. So nothing that you'd really expect to significantly move the market on the day today. All right, let's get into the maps. Okay, first thing I wanted to have a look at is a FTSE. If I can just talk about one thing, I think yesterday, let's actually have a quick look at the Aussie and see the incredible reversal that we saw at the end of the day yesterday. I mean, that shows this morning here, but you can see as of yesterday's session, we actually punched through lows late in the day, right as right about the time that the U.S. market was opening. You can see right here, there's 330. So into the U.S. opening, we punched through the lows by about 50 or 60 points. Really looked like we were going to break down a lot of stocks, Anglos, Naspers, Sasol, all these stocks punching into the lows of the day at that same time. And then we saw a 400-point reversal straight off of that level. And, I just kind of gets you thinking for a catalyst, trying to figure out what's going on. And I think when you look at the action across the board yesterday, I think, some of the things, between the IMF coming out and cutting growth forecasts on, the Russias and the Brazils of the world and even Japan, you actually saw that in the equity indexes. You saw that Brazil was off quite significantly, even with the States kind of rallying. You saw Japan trading poorly, obviously Russia trading poorly as well, and maybe simply just a bit of a shift out of, in terms of allocation of some of those emerging market funds moving into some of the more favored emerging markets, which possibly could be, us. So just keep that in mind. I was kind of searching for answers for why we had such a boom here at the end, but not a whole lot that I could really find. All right, I'm going to look at the FTSE here. We're going to actually take it back and look at a 2-year. I just want to. Yeah. So if you see there on the maps, we're really kind of coming into some sort of, or yesterday we bounced right off of support on the 2-year yesterday, on the 2-year chart down here around 65.45, and I made a nice reversal there. I mean, I think that that level is this trend line is going to really need to hold. We continue to form what I think is still a really bullish pattern, more of a ascending triangle pattern up to resistance just above 6,800, and yeah, I think yesterday was key that we held that support. Obviously, we got a reversal in a lot of markets, but we're going to see in the next couple of days whether or not that can continue to hold. Or at the S&P, if we look at the S&P here, let's zoom it in just a little bit. S&P is at actually crucial support. Yesterday we had a bounce, but I mean it was tiny in the scheme of things, and can easily be overwhelmed with a little bit of selling one day. I think you can see very clearly here that the sort of risk range on that level is about 1842. up to about 1849, somewhere in there. I think if we drop obviously the 1842 level, which is really where we've bottomed out over this little period of the channel, I would say that you could really get an accelerated sell-off in the S&P. So I'm going to be watching that level really closely over the next few sessions. If we can drop that level, I think it would be very significant for global equity markets. All right. Standard Bank has just been the strongest stock on the entire planet as of late. Incredible rally. It kind of seems like what's happened here is that the whole world started to short this thing, especially as we broke the key 120 level, and people, probably a lot of hedge funds, thinking that we were going to get a real spate of interest rate hikes. We ended up really getting nothing to follow through from the once-off 50 basis point hike, and I think that guys got caught on the wrong side of these banks, and maybe all the other interest rate sensitive products, interest rate sensitive stocks for that matter. It seems like all the retailers, a lot of those kind of things are really squeezing as well. So we're going to watch this closely. What I'd like to just look at here is maybe the bottom of this little channel that we had and the continuation pattern that we turned to the upside. That's really projecting us out to, let's have a look here, about a 16 Rand upside, which takes us to about 146. So I think about 146, we're going to be looking at around the fair price in terms of, not fair price, but the target price of the breakout in Standard Bank. So just watch that one closely. Probably expect that to get up to 146 today or tomorrow before it can look to reverse. All right, Foschini, it was incredibly strong yesterday, up 4%, closed it up $1 in the auction. I only really saw this chart as of yesterday. Somehow I missed it, I think because I hadn't been going back far enough. This is a 2-year, and you can see there we really broke out to the upside from the downtrend, the longer term, bigger picture downtrend, and then we came back down the other day. We traded to around 101.20, I think we got down to, but somewhere here around 102.50, 103, that is where there was trend support. What was resistance now becomes support, and you can see there we really just off of this little what's looking like a bull flag now is just ripped higher, and probably give us a slightly higher target, maybe as high as 110 on that little move there. So just be careful of this one. There is some sort of support there now. I know it's run hell of a hard. I've actually been a little bit on the wrong side of this one the last couple sessions, but yeah, I think this one's. This one can be a little bit dangerous. You've seen how badly these guys have gotten caught on the wrong side of Standard Bank and some of these other interest rate sensitive stocks. All right, staying with the retail theme, we're going to go to Woolies and look at Woolies. Same thing, 2-year. I know we showed this the other day. Wanted to show it as well because of the earnings this morning. Or sorry, not earnings. The M&A activity and buying David Jones this morning. You can see there, we're definitely right at support for Woolies. So not 100% sure how the market's going to take the announcement today. I don't expect them to take it incredibly well. It doesn't seem like they got a steal. They're also throwing a hell of a lot of cash at it. So I wouldn't expect it to break out today. But if we do punch above, about 73.70, maybe sort of get up to the 74 level or higher, I think this thing can definitely have legs technically. So just keep that in mind, not just today, but in the next few sessions. And then the last one I'm going to show is Mondi. Mondi dropped the 183 level yesterday, the all-important 183 level. You can see how significant that was. And it did it in big volume. Not that volume matters anymore after the chart that I showed you guys earlier, but yeah, I do think significant. I think trend support, if we run this thing on the wicks, comes in at closer to 172, and there's also a little bit of horizontal support at 172 as well. So I kind of like the way that lines up. And I think that this is definitely still a stock to buy on pullback. So maybe around 172, Mondi, not a bad place to nibble. That's it for today, guys. Thanks a lot.